The Reserve Bank has just released its updated forecast, suggesting our economy will slow rapidly, but not fall into recession, and that unemployment will only gradually rise. Business Editor Ross Greenwood joins us now. Ross, take us through the key assumptions.
Yeah, well, Danica, it's kind of interesting watching this. And one of the things, of course, we got a hint of this was when the Reserve Bank came out with its latest interest rate decision on Tuesday, raising interest rates by 0.5% there. This statement of monetary policy is a quarterly statement that comes out from the Reserve Bank. And what you can see from it is really that they see Australia not really falling backwards at any stage, but economic growth does slow. So you can see even this year, economic growth will be lower than forecast. It was previously up around 4%, the Reserve Bank had it, now 3.2%. And then you can see going out into the next couple of years that economic growth is slowing. So normally economic growth in Australia would be around 3%. That would be around normal. You can also see here that the inflation forecast sees eventually that the inflation does fall. And there are some signs of that, especially with oil prices falling right now, but it does peak around 7.8%, and that will actually suggest that the Reserve Bank will continue to raise interest rates. The final one is employment. This is the key for Australia. With so many people in jobs, it's one of the big issues in regards to making certain that Australian families remain secure and indeed that the financial system stays strong. You can see there that the unemployment rate is tipped to fall to 3.4% by the end of this year, lower than it is currently at 3.5%, and then gradually rise over the next couple of years to some 4%. But that might also be a part of migration starting to increase into Australia. And as those rates start to rise, then naturally the rate of unemployment should also increase a bit as well.
So what does this say then about the RBA's view about the future of interest rates?
Well, what it kind of says to you is at some stage they will pause in these interest rate rises. They won't pause too quickly, you imagine, but they will pause to see what impact these very significant increases in interest rates are having on the Australian community. And one point also is to whether it's curbing spending. There's no real indication that people are stopping their spending. In fact, most people are coping pretty well with the rise in interest rates so far. But eventually they'll either dip into savings. And so long as people have got jobs, then things will be pretty sound. That's what the Reserve Bank is saying right now. But in the meantime, money markets are suggesting that really there is a situation where eventually these rate rises do stop. They say here the forecasts are conditioned on a path for the cash rate broadly in line with expectations derived from surveys from professional economists and financial market pricing. So in other words, they're really saying that the cash rate will peak around 1% higher than what it is right now.
And Ross, I guess if Australia, well, according to these forecasts, avoids a recession, then we're certainly a far cry from other parts of the world, and notably the United Kingdom.
Oh, there's no doubt, because overnight the United Kingdom raised rates by the highest rate in almost 3 decades, and at the same time by increasing the rate, its cash rate, from basically 0.5% to 1.25%, so a 0.75% interest rate increase. It forecasts that inflation could peak as high as 14% there. So in other words, there's going to be a lot more interest rate rises there. And also from the Governor of the Reserve Bank came the forecast of a deep recession.
Now, this rise in energy prices has exacerbated the fall in real incomes and so led to another significant deterioration in the outlook for activity in the UK and in the rest of Europe. GDP growth in the UK has slowed and the economy is now forecast to enter recession later this year.
So a deep recession for the UK, most likely for Europe as well, possibly even the United States, but not here in Australia. And it is also telling that, again, financial markets are relatively strong here in Australia with these lower than expected forecasts, especially for interest rate rises. And that's the reason why our markets continue to have a pretty good run.
Absolutely. A fascinating report. Ross Greenwood, thank you.